Good morning, everyone, and welcome back to this new edition of the Daily Analysis. Let's start with a recap of yesterday, a day that basically went sideways overall, with an attempt to break the highs only to pull back again. And the situation, in my opinion, as I also pointed out yesterday in the chat regarding the positioning of the CTAs and some other components that I mentioned in previous editions of this daily analysis, suggests, in short, caution. I'm not saying that the market will necessarily go down or anything like that. What I'm saying is simply that it seems like the bulls have kind of run out of ammunition for various reasons, which if you just go back and look at the daily analysis from the past few days, I've talked about this at length. Today, from a macro perspective, we don't really have any major news. There's the ECB at 2:15 p.m., but the rate cut has already been widely priced in by the markets. Then there's the unemployment data in the afternoon, but it shouldn't, as far as the United States is concerned, it shouldn't really be a significant market mover. Obviously, the main focus will then be on the non-farm payrolls report, which, as we know, definitely have even greater overall significance, especially in the current economic context. So I wanted to show you, this is my canary in the coal mine as far as Europe is concerned, which is also continuing to move at a brisk pace. The index, not the futures of the DAX, yesterday hit a new all-time high, updating the ATH. However, there is a bit of weakness. I keep pointing out that volumes are low pretty much everywhere. Especially on the DAX, and for me this is a first warning sign. This chart you're seeing is a chart of T-off, the European banking sector, which is always, let's say, my canary in the coal mine. It's always very strong, very trend following, and it always tends to anticipate a bit the movements that later show up in the equity futures. An equivalent of this for this, as far as there are some CFDs from Arca, if I remember correctly, that refer to the American regional banks and the American national banks. I don't remember the ticker exactly right now. Maybe I'll look it up later and post it in the chat. But you can use those as your canary in the coal mine for the American markets and futures, which in my opinion definitely connect. So this is a daily chart, and it shows us that basically we've broken out of this nice upward channel with this big candle. It's been moving sideways a bit, but while right now the markets, the stock indices are continuing to rise, but with low volumes, this one has stopped and is starting to pull back. And for me, this is an initial warning sign. If we then add this, what we said about the CTAs, about the lack of roughly 6 billion a day that will be missing with the end of buybacks by companies, well, it could create the conditions for a market correction. After all, as an old stock market saying goes, the bears are ready to press the ground floor button in the elevator when everyone has gotten on board. And well, in my opinion, at these highs, that's exactly what they're doing. They're letting everyone get on board. We'll see what happens next. Perfect. With this brief introduction out of the way, let's move on as usual to an analysis of what we can expect today, starting with the Nasdaq, which we can see here. As I mentioned yesterday, the Nasdaq attempted a breakout, but let me show you. If we zoom out, we can see that we stayed below this high that was recorded on May 29. And from here, it didn't even manage to reach it before it started to drop and move sideways as well. So here too, in my opinion, that's a bit of a warning sign. Probably today, given the lack of macro data and well, the absence of any particular situations, at least unless something unexpected comes up, I think we'll likely see another sideways day with a bit of up and down, but without any major shakeups, especially due to the lack of volume even in the United States. Even the American indices, the futures are all trading with below average volumes. For example, the SP yesterday reached about 1 million and a bit, which is really very little for the SP. So let's keep a very close eye on everything I've been telling you. From an operational point of view, at the moment we are within a nice BC3 range, which I think will probably remain between today's SD0 and RD0 with some possible extension on the lower side as well. This could happen if we break through 21.720. In that case, we might see a move down to test these lows here, which are more or less in the area of S-Dawn or just below. On the upside, of course, we need to monitor not just a breakout, but a clear and decisive one above these highs. What's most important is this. Now we'll also look at ES, which is in exactly the same situation. Yesterday it too came close to touching this high, but stopped short, not reaching 6,800, which was the previous high, and then dropped. You can see how, unlike the Nasdaq, which has been a bit stronger in recent days, it's working in the lower part of the BC3 range. So we've already come close to touching this lower part, and we are encountering some difficulty here at 5,980. You can see how clearly it's defined. So we might continue to trade here, but a break at today's SD0 level could trigger a nice move up to this high here at 59.5, which matches up with this area, and then it could even extend further. We'll see how things develop. Obviously, for ES as well, on the upside, we need to monitor this entire area of highs, which will definitely be the first obstacle we encounter, and the second will certainly be this one around the 6,800 area. Let's move on to the other two American futures, starting with the Dow Jones share. It comes perfect. Here it is. Same situation here as well. This is the high that was also recorded on the 29th. We almost reached it yesterday. We came close, but just couldn't make it. The volumes dropped off and the decline began. The Dow Jones too, this morning, yesterday it traded below this entire BC3 area, so now there's already this area to recover, which is 42.5. You can see how clearly it's outlined, so maximum attention is needed. A sideways movement could form here between SD0 and RD0. SD0 on the downside, obviously 42.4 or rather 42.3 seems to be the clearly defined area, so we absolutely need to monitor SD0. On the upside, obviously, the situation is similar to what we discussed for the Nasdaq and for ES. Let's take a look at the Russell. Here it is. It too, fortunately, is holding above 200, so it's really right at those levels. 280 for the Russell at this moment, I think, is the most important level. It's resting here on this whole area of highs, but the break of this level could easily bring prices back to test this area here around 275, 280. To the upside, of course, here look at all these lower highs, and now this base of support has formed here, so let's keep an eye on this area, and obviously to the upside. The first high we encounter is 2,107. So that will be the first obstacle to watch. Let's also take a look at the DAX, which just opened. Here it is. As we were saying, the index hit its all-time high yesterday, but the futures didn't. They didn't reach new highs. And, what keeps worrying me about the DAX is the really low volumes, and we're in a bit of a situation. I don't really know how to define it. This ongoing rise, it's not excessive, and even yesterday it mirrored a bit of what the Americans did. They tried to break out upwards, only to fall back into the range and go test the previous highs. Then there was a bit of a recovery in the afternoon. At the moment, this is the situation. As you can see, we're working right at the edge of the range area. BC3 range breach. Let's also monitor SD0 and RD0 for the DAX with an extension up to RDON, which is more or less the area of the highs recorded yesterday morning. So this is definitely the area to keep an eye on. If this area holds, prices could also test this lower pivot at 2460, absolutely. Let's move on to commodities, starting with oil. Here it comes. Well, yesterday there was the data release that triggered a bit of a pullback, the data on US inventories, but basically we stayed within the range I pointed out yesterday morning, which was between 63.5 and roughly 63.8, with this 62.3, 62.5 level that then held perfectly, causing the price to bounce back. At the moment, we're back in the middle of this range. Yesterday we were in the upper part, now we're operating in the lower part, but more or less the midpoint of the range remains the same, so nothing has changed. We're still in this range, just now in the lower part. Let's keep an eye on this level because it could bring us back to the upper part with renewed attempts at the 63.864 area, or obviously a move downward. Let's monitor this area here around 62.3, 62.5, because if it breaks, prices could easily go back to retest this area here at 60.9, 60.5. Let's take a look at gold. Of course, here it comes. Perfect. Here it is. Yesterday, gold also held that 3.38 level we pointed out yesterday morning. It maintained that level, and I mentioned that we hadn't really broken through the low, so I was expecting a rebound there, which did happen. However, gold also encountered strong resistance here, not quite reaching these highs, and now it's weakening a bit. It's currently resting on the BC3 levels, which we could also interpret as a potential flag breakout. So this might be a new test to possibly move back into this area here. We're quite familiar with the dynamics of these patterns, which you can also find in my book. So let's keep an eye on the downside at 3.38 for now, or on the upside, of course, this whole area here, because break of 3.4 or 3.41 could push prices to break this high here at 3.42 as well. Let's take a look at Bitcoin. Here it is. Yesterday afternoon, after breaking the low of the range, the middle of the range that I pointed out, that we had indicated with this figure, it came down to test the area, then dropped again, and we're still working on it. Nothing has changed for Bitcoin either, which continues to move in the same way. We can easily leave the chart as it is, just extending it a bit to keep working on it. The price action here went to 104 and 200. So basically this is the whole area to keep an eye on. We've been moving sideways for a few days now, about a week. You can see there have been a few upward spikes, but overall it's a sideways trend. Now we're in the lower part. If we get back above this blue line, we'll be working in the upper part. Let's take a look at the SPX for a moment. Let me remove this tool I'm working on for options. I'll present it once everything is ready. Unfortunately, things are taking a bit longer than expected, but I'm working day and night to get everything ready for you and to make sure it all works properly. As we were saying about the SPX, the situation is similar. It formed a beautiful triple top, which we can identify around the 5,990 area. So be very careful, because in my opinion a break now below 5,870 could trigger a significant move to test 5,930 or 5,920. We absolutely need to keep an eye on it. Obviously on the upside we should monitor this area here, because a break above 5,990 could push prices up to around 620 or even 625 for sure. Perfect. We've reached the end of this daily analysis. As always, I invite you to leave a like on the video, follow me on social media, and we'll catch up later in the chat. Thank you all for your attention.